Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking back in on gold, the dollar, miners. So look at this resistance playing out. We've got 1238.85 was our top, double top, triple top. That set the tone today. This morning when we could not break that level, I looked this morning and I saw we were well above it. I thought, oh wow, the bulls are going to have a nice day today. Check back in when that candlestick closed before the open, and we had a rejection from that resistance with a big upper wick showing lots of profit taking. So that right there set the tone. As you head into the day, we now have a very clear resistance level, and we can say if the gold bulls cannot turn 1238.85 into support, the bears have control of the short term. So that is the way the setup went. We rejected again the next candlestick, and then we dumped, and that gave the bears a really nice move to the upside. So that one candlestick set the tone for the morning, told us which direction to be looking in, just like yesterday, the oversold bounce told us which direction to be looking in, the very oversold levels on the shorter term time frames. So checking in on that setup, making sure you're up well before the bell rings so you're getting a clear picture of what's going on is really important. And that had us knowing that if the bulls in gold cannot turn 1238.85 into support, we're looking bearish to start today. The bulls did have a really nice bounce in reaction to the FOMC minutes, but look at these rejections yet again. We rejected to the penny from 1238.85, 1238.89. So it is a very clear resistance at this point. If the bulls cannot get over that level, the bears remain in control for the short term, and we now have an ascending triangle pattern where we've got our clear horizontal resistance line, our higher low pattern. I drew this uptrend line to watch this tightening range, and sometime tomorrow we will likely see a clear break of this pattern if it does not occur overnight. So at this point, the bulls need to maintain the higher low of 1230.90 to keep that higher low pattern intact, and we'll be seeing if the bulls can get over 1238.85. If they do get over that level, it is not blue skies ahead here. We've got a couple key resistance levels up here in the low 1240s. And if we zoom out to the daily time frame, we can see why that level is resistance. That's going to be the multiple tops that we've seen here, topped out at 1244.56, 1244.36, 1243.69. So there's some tough resistance in the low 1240s. So there are a couple levels that the bulls need to get above. Look at this 10-day moving average support tested yet again, holding yet again. Checking in on the dollar. So the dollar has a bit of that double top in the sense that we did not break the 101.76 high. So we had our high bounce of 101.76. Our low of consolidation is 141 support. I'm going to move this line down to make sure we hit that level. And in terms of our lower high now, 101.72. And it's a bearish reversal candlestick on the daily time frame. So we're looking for the same thing. We're looking for a red day to confirm this candlestick, and then we'll be watching to see if we break 141 to see a lower high and then a lower low, which would keep this potential bearish reversal head and shoulders pattern in play. If we break 101.76, that would be enough of a higher low and a higher high with bulls having short-term momentum for me to disregard this pattern for now, but I'm never going to disregard this support, this double low of consolidation at 99.43. So pretty important day for the dollar tomorrow after another long upper wick rejecting from those resistances. Checking in on these bull miners, the bulls bought the dip yet again, but we have GDX losing the middle Bollinger Band daily support and seeing this bearish TCG cross with the 4-period exponential crossing the 8-period to the downside. This is the first time that cross has happened after the oversold bounce began to play out on gold and these miners. So it is definitely worth noting, and it is concerning for the bulls in the short term, that we did lose the middle Bollinger Band and did see that bearish cross. Now again, as I said in the last video, there is no concern For the longer term bulls, this is a bull flag pattern still. Healthy consolidation the past 2 weeks, nice contained pullback, and we could absolutely see continuation in the next week to end February, maybe to start March. So longer term bulls are not concerned with this pullback, but the shorter term bulls, looking on the daily chart, are a bit concerned with what's going on. We've got GDXJ is more bullish. And I will show you why. They are still holding that daily middle Bollinger Band. Bulls bought that dip, held that middle Bollinger Band, and we're just on the verge of that bearish TCG cross. Hasn't really followed through significantly at this point. So if we were to see a green day tomorrow confirming this bullish doji, we would see that negated, and we would still be remaining bullish on these exponential moving averages. So watching very closely, it too is a bull flag of consolidation on the weekly time frame. The bulls want to see decreasing bear volume on that consolidation. We have to keep in mind we have one less trading day this week, accounting for 20% less of the volume. But as of right now, it looks nice and contained, exactly what the bulls want to see after a multiple month breakout on that big time bounce. So all in all, key dollar resistance, 101.76. Key gold resistance is 10, make that 12.38.85. Silver's in a nice bull flag pattern on the daily time frame, watching for a bull break there to maybe give us some early indication that gold is going to break bullish. And obviously, if we have a bearish break, we'll be looking for the same thing. But as of right now, watching for a bullish continuation move on silver. And last, we've got these miners trying to see follow through and negate that bearish MACD, or I should say the bearish exponential moving average cross to the downside. So lots of levels to be watching. But if you're doing this every day, and obviously I'm the one giving the analysis, but do your own analysis every day. You've watched me enough at this point, most likely, that you know pretty much what I'm going to be saying, and you can try and emulate that. One of the biggest factors for me for learning technical analysis and gaining my own independence with the charts was emulating my mentor and thinking, okay, what would he say if he's looking at this chart? And then I would just spit it right back out. Back then we were doing it via text, so I was typing, but I would just type in exactly the same way that he would, and I very quickly caught on with the main things that he'd be looking out and what to point at. So if you come on every morning and you're looking at the same things that I'm pointing out in these videos every day, it's going to get you more prepared. There's going to be a lot less confusion in the day. So practice your own technical analysis at home. I dare you to record some videos. Do it. It will put you out there. You'll get better at talking. You'll get better at technical analysis. And feel free to share. Definitely down to check out any videos you guys got. So thanks for checking in, and we will check back in tomorrow after the close.